All right, y'all. We are live on this beautiful yet cloudy Sunday morning, and it's going to be a little different type of stream today. Today is going to be more of a tutorial, a trading tutorial on how to use Market Cipher, especially for newer traders, people who are looking for a way to dive in to trading, looking for some simple yet effective strategies to start being profitable right away. And so it's not going to be a normal technical analysis stream, just so you guys are aware, but I will dive into the charts a little bit, tell you guys what I'm thinking. But first of all, let me say welcome and blessings to everybody in the name of Yeshua the Messiah, Jesus the Messiah, the creator of heaven and earth, the reason for all things. Alright, so what I really want to discuss in this video is how to use Market Cipher in a way that is effective in various market conditions. Because Market Cipher is a powerful tool, we can use it to find good entries, we can use it to find good exits. However, it's not really a one-size-fits-all depending on the market condition. You need to change the way you use it if we're in an uptrend. You need to change the way you use it if we are in a downtrend. And you especially need to change the way you use this if you are in a sideways market, similar to what we've been experiencing since May 19th. Ever since we had this massive sell-off, and we've seen the price come down from our all-time high of about $65,000, we've been trading sideways with inside what most of us thought was a symmetrical triangle. In the beginning, we thought we were forming this type of symmetrical triangle right here. But actually, I think it's also quite possible to say that now we're trading in more of this wedge or channel, potentially, just by connecting these areas together. And that's because we've been unable to break below this support right here. So now I'm kind of watching this. Although if we do continue to keep it as the triangle, you can still see that this lower support of the triangle is now acting as our resistance. So we could even do something like this right here now and say that we have two supports. Let me pop into the chat and make sure everything's going well. Yeah, welcome guys. Thank you for being here today. Blessings to all of you. People want to see me pull out the fib. Yeah, we will probably pull out the fib. Oh, sorry about that. Yeah, I need to shave. Let me shave real quick. There we go. Just shaved. Thank you, the Flav. Guys, make sure to FOMO into the like button. Here. Let's get this video up here to get some likes, right? So that the YouTube algos can help people find this stuff. All right, so I've got an outline, basically, of how we're going to use Market Cipher in uptrends and downtrends and in sideways markets. And I want to start with sideways markets because that's where we find ourselves right now. Obviously, for the past few weeks, really, there has been much trade opportunity in this sideways range, and many of you know how I personally am trading this. If you follow the channel, you know I posted a video right here. I guess about 4 days. Yeah, was it 4 days ago? Yeah, it was right here. Basically, how I used Market Cipher to literally short the top and long the bottom of the move that we saw here. This is one of my trading strategies, but what I'm about to show you today is a little bit different. Today we're actually going to be just using Market Cipher in a way that I think is easy for somebody who's newer to trading to understand. So what we're going to do is we're going to break this down, and we're going to say, what are we going to look for in order to find in a sideways market? In a sideways market using Market Cipher, what are we going to look for to find an entry into a trade? And then what are we going to look for to exit a trade? How are we going to set our take profits? How are we going to set our stop loss? What is going to signal us to exit the trade? It's very important, especially if you're newer to trading or if you're older to trading, that you have a plan going into a trade. Okay, we can't just look for good entries. We cannot just look for good entries, and here's why. Let me show you. Let me show you why we can't just look for good entries. Let's say, as an example, okay, that we decided to long this thing right here, okay? Or no, even better. Let's say that somehow we got a good entry signal to long this right here. And we do. And we're in a trade and we come up a nice 1.6%, but then we don't know when to exit. Well, that winning trade could very easily turn into a losing trade. And a lot of times if people don't have a plan going into a trade, well, those winners turn into losers. Or the losers turn into even bigger losers. Can't tell you how many times people have hit me up and say, "Hey, Jay." And I'm like, "Yeah?" And they're like, "Hey." And I'm like, "What?" They're like, I longed at 40,000 and I'm still in the trade. I'm down tens of thousands, hundreds of thousands of dollars. What should I do? Should I put more margin on? Should I fund my account with more money to lower my liquidation price? And then it basically just becomes a gamble. So we want to avoid that totally. What we want to do before every single trade is have a plan, exit, entry, where to take profit, where to put the stop loss. So when it comes to this strategy that I'm about to show you, it involves using the 1 hour time frame. Just very simply using the 1 hour time frame. Now, remember, we're dealing with sideways markets here. So, this is not the strategy to use if you pull up the Bitcoin charts, if you pull up the Chizarts, right, and you see something like this. Okay, if you see something like this right here, that what I'm looking on my screen right now, which is a clear downtrend, this is not where you want to be using this strategy, right? If you see something like this, where we're clearly coming down, printing lower lows and lower highs, all the way down like this is something you want to use if you see little ranges where we're trading sideways like this, something in here like this. Yeah, but if we're in an uptrend or a downtrend, you don't want to do this. So you're going to go start on the 1 hour time frame, and we are going to have certain confirmations to get us into a trade. Certain confirmations to get us into a trade. What are we going to look for? Well, the first thing that is extremely important that will get you into the best possible trades that you could possibly get into are going to be divergences. And what I mean by divergences, and this is very important, so because it's so important, I'm going to give it an asterisk, which is a fancy name for a star, okay? The reason it's so important is because divergences signal to us that there's an imbalance, that or that Bitcoin or whatever asset you're trading is trading at an unfair price, okay? And here's what a divergence is. We can see one very clearly right here. There's a divergence right here. Let me quickly zoom in and show you why this is a divergence. A divergence is when you have the price and the momentum doing the opposite thing. So right here we can clearly see that the price of Bitcoin from this green dot down here, okay? We're basically looking at the dots on Market Cipher and where the price was trading when those dots confirmed. So when this green dot confirmed, the price was up here. And then when this green dot confirmed, the one right here, we can see that the price has gone from up here to way down here, okay? Way down here. And so what this means is that price has been coming down while momentum, if we connect these green dots together, has been rising, okay? This means that, and not only has the momentum been rising, but the money flow has also been curving to the upside. So what this means is that even though money is coming into Bitcoin, even though momentum is increasing, the price is coming down, which means there needs to be a correction. And the correction, if Bitcoin is trading at an undervalued price, that correction will correct upward. And notice what happens once this divergence plays out is that we get a very strong move to the upside. In fact, we get a move that's about almost 27%, almost 30%. Okay, so these are very powerful things. They do not come up very often. But you can have bullish divergences. Bullish divergences is where the price is printing lower lows and the momentum is printing higher lows. So that's going to be the first entry signal that we look for. And again, this is a special one because they're not going to happen all the time. But there are many other, there's other sets of indicators we can look for when we're looking to enter into a trade on the 1 hour time frame that will come up more often. In fact, I'm convinced and persuaded that there is an opportunity to catch a nice move multiple times a day using this strategy, even in a sideways market like this. So if you can find a divergence, that is, a very powerful thing. Even just now, just recently, if you take a look, we did have a divergence that played out where the price was here, and then we came down to here, while simultaneously the momentum was going from here to here. And what happened, in fact, I woke up this morning and saw this, we could have entered a trade right here, this purple candle, and made a nice 2.4% move, which, that's a really nice move. If you're using like 2x leverage, that's a 5% move. If you're using, 4x leverage, that's, a 10% move right there. So these divergences, they will most of the time play out into a move that is quite significant. Now, there's other ways that we can enter the markets in a trade, and that is now going to be momentum waves and money flow. Momentum waves and money flow. And after I go through this, we're going to go back and just back test this strategy live. We're going to back test it live, and we're going to see, is this an effective way to trade? The entries, the exits, we're going to see, is this actually an effective way to trade? We're going to just go back, look at the price action, stick to this strategy to a T, and we're going to take track of the win rate of these trades, because you're going to see it has a very high win rate. And we're just simplifying things, very much so, stripping it down, making it simple. You can be successful simplifying your trading. In fact, I think that's a very important aspect of trading, is to simplify things. Simplification. So the second thing we're going to be doing to enter trades is looking at momentum waves and money flow. And the fourth thing is actually going to be support and resistance lines. This has an asterisk by it because this is not necessarily necessary. Not necessarily necessary, but it's still important because it can help us very much so entering into trades, and I'll get into that a little bit later. But now what we're going to be looking for, if we don't see a divergence, let's say that we do not see any kind of divergence like we see right here. Okay, you guys notice right here there's a very clear bullish divergence. Momentum is coming up, making higher lows, while simultaneously price is coming down, making lower lows. And then we get a massive move to the upside right there. Yeah, that was a really nice move. But let's say you come to the charts and there is no divergence, right? Let's say, for example, we enter a trade. We're looking to enter a trade somewhere. Let's say we come to the markets, and this is what we see. We see something like this. Okay? We see something like this. What trade would we take in this situation? This is where we're going to be looking at momentum waves and money flow together. Momentum waves and money flow together. Now, money flow is something that's, I would say, it's the most powerful indicator on Market Cipher in general, because literally these waves, the blue and the purple, although if you have Market Cipher stock, it's going to be red and green. But the blue and the purple is literally showing us money coming and leaving the market. Coming and leaving the market. So some people say they can't hear me, but others say that they can. Nasty Paul wants to know, why am I streaming at this hour? Well, it's because I'm up at this hour, I guess. Material in the course. Yeah, I mean, this material is in the course, and we also go through much more. So if anybody's interested in learning technical analysis in great detail, learning the way I trade, You can check out jasoncaspertrading.com. This course will give you the knowledge and the skills you need to become a confident, profitable trader. We go through technical analysis. You can check out the testimonials, these success stories here. Basically, we go through everything you need to create your own trading strategy where you can be confident and profitable. It doesn't matter what anybody on YouTube is doing, what anybody's saying. You will have your own plan that you can test and use. And we go through all the TA you need to know. We go through Market Cipher in extreme detail, how to create your strategy. I give you 3 or 4 strategies that have already been tested. This video right here is just a taste of that, of the way we go through the course. And so, shout out to Wing Commander in the chat. Shout out to Stuart Avery, who says the VWAP is very important. Yeah, the VWAP is important, but the money flow, I would say, is probably the most important thing to look at. The money flow and the momentum waves together are the most important things, in my opinion, to look at. Now, here's why. Let's just take a look at this money flow on the 1 hour. If we just look at the money flow and enter a trade when the money flow is crossing up from purple to blue, and then we enter a trade when the money flow is crossing down, let's just mark this out and just take a look. Just take a look at, what would happen. What would happen if we only traded using the money flow? It's actually quite interesting. It's quite interesting. Okay? Now, I'm not saying that we're going to win every trade just by doing this. I'm just saying if we take a look, if we just take a look at the 1 hour time frame and we enter a trade every time money flow crosses, you'll see that there's always an opportunity to make profit. In other words, the price from the time that the money flow crosses from purple to blue, price does go up. In fact, it goes up 3.3%. And then the same is true when we cross from the blue into the purple. You can see price comes down 18%. And then when we cross from the purple into the blue again, you can see that price goes up 8%. And then when we cross from the blue into the purple again, you can see that price comes down about 13%. We cross from the purple into the blue, and what happens? Price does come up a little bit. Hang on, I made a mistake there. Price comes up about let's see, about 2.5%. And then we cross from the blue into the purple, and what happens? Well, price comes down a little tiny bit, 1%. Okay. Of course, then we go back up a 1.5%. Then we cross from the purple into the blue again, and what happens? Well, price comes up 8%. So you can see, just only using the money flow on the 1 hour, you could, it would take some serious cojones to do this, because a lot of times what's going to happen is you enter and then price, like right here, you would have entered up here, price comes down. I'm sorry, that's not the right spot. If we had entered when money flow crosses up right here, you would have entered and been down 6.6% before price comes up, 3.22%. So you probably would have gotten stopped out on this, which is why we need to use the money flow in conjunction with the momentum waves, because the momentum waves are actually going to tell us when we're going to get that powerful move. The money flow is showing us which way money is coming into the asset. The momentum waves are going to show us, when we're going to get that big old coveted pump, the pump that everyone's looking for, the pump that Arnold Schwarzenegger was after, the pump. Okay, so let's turn back on our light blue wave, our dark blue wave. We'll turn back on the WAP, okay, the VWAP. We'll turn on the blue wave crossing up, the blue wave crossing down. These are the dots that everybody loves, right? Nice green dots that everybody likes to long, the red dots that everybody likes to short. So here's what we're going to do now. We are going to be looking at the money flow and the momentum waves together in order to find a good entry, So what we're going to do is we are, first of all, going to be looking at the money flow to start. If we notice that money flow is curving or has recently curved from the purple into the blue, that's where we are going to look for a long position, okay? And once we see this money flow, okay, so right here, this is a prime example, okay? This is the prime rib of the examples that I'm trying to look for. What we want to see is, well, let us go back in time. Let us go back in time to a time when Bitcoin was much simpler. Okay, Bitcoin was much simpler. Let's say we come to the charts and we see this happening. Okay, we see that money flow is curving from the purple into the blue. Okay, it just has recently curved. This should tell us something about, how we should be trading. We should be looking for more so a long trade than a short trade. And what we're going to do is we're actually going to wait until we see a green dot print below the zero line. Okay, that's important. We want to see it printing below that zero line. And when does that happen? Well, it's starting to happen right here. Okay, starting to happen right here. We can see this wave curving. Okay, and notice something important. Not only is the money flow curving blue like what we want to see, right, but also we can clearly see the momentum is coming up, right? The momentum is coming up from the time that we printed these green dots down here. This momentum wave is higher, showing us an upward direction. So not only is the purple money flow curving upwards, right, but the momentum is showing us we have the anchor and then the trigger. And so that would be our entry. And what we would do is we would enter the long position here. We would put our stop loss below the last swing low, and I'm going to get into that more later on how we're going to do that. And then, if we just watch to see what happens, we come up from there, right? We come up from there. And as we're coming up, the money flow is getting thicker. And so that's how we're going to look for the long. And before we're done with this video, I'll be showing you how we're going to set our take profits. And I'm going to go into more detail how to set our stop loss. This way, okay, we don't end up in a position where we're in a trade without a plan. We don't end up in a position where we're losing more money than we should be, because risk management is very important. Also, risk management is a part of this course too, right? We go through risk management, how to manage an account, how to manage your risk so that you're not leaking money, okay? One of the most important things about trading is preserving your capital. Preserving your capital, okay? Your capital, right? Isn't that what it's called? To preserve your capital, okay? I've got some open trades here, guys. Some open trades. So, that is how we're going to find our long entries. You're either going to look for a divergence or you're going to look for the money flow and the direction of the momentum waves, okay? So now what we're going to do, let's say, is we want to look for a short position. We want to look for a short position. Well, what I like to look for in a short position is either a divergence where, momentum is coming down, price is coming up, okay? In fact, let me show you an example of that. A great example of the bearish divergence is right here, where we can clearly see the momentum coming down, okay, and yet the price is coming up from right here to right here. We could enter that nice trade right there and get a little move to the downside of about 5%. That's a big move, guys. That is a big move, okay? And that would be entry number one. So the first thing you're always going to look for if you're looking for a nice trade is divergences. Those on the 1 hour time frame will, I would say 90% of the time, give you a very significant move, The second thing, if there's no divergence, is we're going to be looking for momentum waves and money flow, and we're going to be looking for direction. So one of the best examples of direction is actually right here. Look at how if we connect the momentum waves together and just draw on this thing, right? Because again, remember, Market Cipher is giving us the money leaving the market, the money coming into the market, and it's also important to know that once we start peaking out, right? Once these waves start peaking out, it means that a reversal is going to come soon. It means the reversal in money flow and momentum is going to come soon. And the way we can tell, because here's the thing, people say and people ask, well, Jason, if we were in the middle of this, right? If we were trading, let's say right here, okay, and we're back in time, and we're just looking at this right here, there's no way for me to tell if money flow is getting thinner or thicker. In fact, it actually looks like money flow is getting thicker. It looks like we're gonna like go higher, right? Here's how we can know money flow is actually starting to come down, and this is the peak. This is the top of the mountain. The way we can know is by looking at these momentum waves. As price is coming up and money flow is getting thicker, we can see that the momentum is getting less. Okay, so when we see this direction on the momentum waves, where we see these big old mountaintops, and then we see a little bit smaller of a mountaintop, and then we see this tiny little molehill of a mountaintop, this is showing us, okay, right here, I see this direction, we're coming down. We are coming down. And so you would enter your trade when you see that red dot starting to print. Now, of course, there's a few different options. Do you wait for the red dot to confirm? Do you wait for it to print? I like to wait for it to start to print. So, and you got to be careful because you don't want to front run this, because a lot of times it could look like the red dot's about to print, but then there's like, no, just kidding. So now we have the red dot. We see that even though the money flow is getting nice and thick, okay, we still see a very clear direction, downward momentum, telling us we've reached the peak of the money flow. Because let's just go look at how the money flow stuff works, right? We can see money flow gets blue, momentum waves come down, eventually money flow turns purple. Money flow turns purple, it's the opposite. The momentum waves come up, and then the money flow turns blue again, okay? Right here is a perfect example. The money flow crosses from the blue into the purple. We come down until it comes back up, and look at how the waves are showing us we are going to come back up. And the same is true right here, where we take a look at the momentum waves generally coming down, okay? Generally coming down as the money flow is also starting to get less and less. Now again, this is going to take some kind of subjectivity, but I do believe that if you stick to these principles, that you will be able to find those good trade entries. So in this case, we would enter a short position. We'd enter short position right here, okay? We would put our stop loss above the last swing high, and then we'd set our take profits along the way down. I'll show you how to do that in a second. And then if we just play this thing, okay, we can see that we do come down, okay? We come down. We get a pretty nice move of about, if we entered right here, a pretty nice move of about, 7.22%. So again, we're just looking at the direction of the money flow and the momentum waves together. Money flow and momentum waves together, okay? And if we take a look here, we could have done that many times. We could have shorted many times right here. We could have shorted many times simply just by looking at the direction of the momentum waves, right? We can see that right here we have a higher, we have a lower. I mean, you could have really even gotten a nice scalp here, a nice 1.5%. Of course, well, I'll get into that later. Then you see this one coming down here. You could have gotten a nice trade out of that one as well. Come down a nice 5.6%, 5.16%. And again, right here, we could have gotten this, a nice 7%. So this really can be an effective strategy, especially if you're able to have clear entry and exit plans, okay? Especially if you're able to have clear entry and exit plans. So let's close this out now. Close off memory mode that we got going on here. This was I went over this divergence that was playing out that got us a nice move. So what I want to do now is I just want to go back in time, and I want to kind of backtest. I want to backtest this this strategy here, and just see is this something that can actually work. So somebody wants to know. Okay, we have some questions in the chat. So Mark Tucker says, should VWAP always be pointing the direction of the trade? Yeah, I would say that yes, the VWAP should be pointing the direction of the trade, and it doesn't have to be crossed over the zero line all the time. Okay, VWAP does not always have to be crossed over the zero line. It could be under the zero line pointing up, okay? But most of the time, you'll, especially if you're waiting for the dot to start printing, the dot prints usually during or right after that VWAP cross. So we can see right here the VWAP is about touching the zero line right before the dot confirms, and then it crosses over the zero line as the dot is printing and then confirming. So yeah. And guys, make sure to FOMO into the like button of this video, because unlike trading Bitcoin, where FOMO inevitably leads to losses and distress and destruction, the Jason Casper video like button is going parabolic right now. And if you don't like this video right now, you're going to miss out. You know, the people who like this video right now are like the people who invested in Bitcoin back in 2010 when it was a couple cents. And everybody thought they were nuts. But then now look, Bitcoin is... Can you believe it? Bitcoin is $36,000. Absolutely insane, guys. Absolutely insane. Alien activity is waiting to buy the dip on the like button. Well, I'm telling you guys, we definitely do have a dip on the like button right now, because we only have about half the likes as we have people watching. So what I want to do now is I want to go back in time, and I want to backtest this strategy. I want to backtest the strategy. And let's just take note of, well, actually, before I backtest the strategy, I have to talk about how we're gonna set our exits, right? How are we gonna set our exits? Okay, how are we gonna set our take profit levels? The way I like to trade, guys, is I like to enter a trade. Okay, just as an example, let's say I'm entering a long position right here. I like to take partial profit along the way up. So if I'm entering a trade right here, I have my stop loss. I'll talk about stop losses in a second. I would like to take profit at certain points. So I would take profit probably here. I would take profit probably right about here. And I would take profit right here. And how am I getting these take profit level? Actually, I would probably take profit there too. How am I getting these take profit levels? Well, what I'm doing is I'm literally just using support and resistance lines. What I'm doing is I'm going to the left of my chart, and I'm looking to see where did price historically find some kind of a sticking point. Okay, so if I go back in time, I can see that price wicked down perfectly to here. Again, this was a bottom right here, and then very recently to my trade, if we zoom in here, we can see that this was a level of support right here, and then let's see, yeah, and so as I'm entering this long position, whoops daisy, as I'm entering this long position here, this is going to be one of the places I'm looking for price to come. And what do you know? Price comes up, and we hit this level perfectly, and then we lose it a little bit more. And then you could say the same thing for this level up here, where if we go back to the left of the chart, we can see that this was acting as our support. Like, look, we wicked down to it once, we wicked down to it twice, then it's acting as our resistance, acting as our support, our resistance, our support, all these touches right here. So it's no surprise that when price comes up to this level, what happens? Well, we reject perfectly off of that level, right? We reject perfectly off of that level. And so that's one of the ways I'm going to be setting my take profits. And when I do my take profits, what I do is I will take out maybe anywhere from 15 to 50% of my trade on Bybit. We hit this first level, which is a pretty decent move, right? That's a nice 5% move. This would have been a really nice swing long trade. And believe it or not, guys, I actually did long. I actually had an even better entry than that. My entry was like 31.1 something. In fact, if I come into my Discord over here and take a look at yeah, where did I post that? In the Jason Casper TA channel. Yeah, this is my entry when I was in that trade. Right here. Yeah, I got in at 31.190. 31.190 is when I got in. So I really did long the bottom there. I longed the bottom, guys, using this strategy right here. Okay, check out this video. Finding perfect entries, awesome trading strategy, beginner friendly. I would say it's intermediate / beginner friendly. It's not hard to do, but if you're totally new, you might need to start on some basics. And Guys, if you are totally new and you're looking for an orderly, precise way to learn this stuff, check out jasoncaspertrading.com, where we go through pretty much everything you need to know in order to have a very good foundation, and in order to start with your foot on the right step. Okay, if that makes any sense, to start on your foot on the right step. jasoncaspertrading.com, link in the description of the vid. But anyway, I like to take partial profit. So let's say I take 30% of my profit out right here. Then what I'll do is I'll move my stop loss to the entry, okay, on Bybit or whatever exchange I'm using, Prime XBT, Bybit, whatever. And now what this does is it guarantees that I'm going to be in profit. There's no way now I could lose this trade. Nobody ever went broke taking profit. So if you hit your first take profit, and then you move that stop loss to your entry, okay, and now it's guaranteeing that your account is you're going to come out of this trade with more money in your account than you started. And then you hit your second take profit, right? And then what do I like to do? Honestly, I like to take another percentage out of that trade. And then you can either keep your stop loss at the entry, or you can move your stop loss up to that first take profit level or a little bit below it, or move your stop loss below the last swing low, whatever fits your personal style. And what this does is it locks in the profits so that you cannot lose these trades. So HP90 wants to know, what do I think about Cryptoface's divergence strategy? Does it work? Yeah, that's basically what I'm showing you guys here. The first thing I look for is divergences, but the second thing I'm looking for is direction and money flow, because you can find more trades than just looking for divergences. And YE wants to know if I can show how I would scalp. People are asking about scalping videos. Guys, the way I scalp is, well, first of all, I'm not much of a scalper, okay? I'm really not. I will stay in trades for hours. That's kind of the way I roll. Right here, Jason Casper Trading, is that what I'm looking for? No. Although I do go into scalping strategies in this course, this video right here, finding perfect entries, this is a strategy that I really do use to scalp. Basically, if I'm scalping, guys, I'm marking levels of support and resistance, and I'm looking for entries using Market Cipher. Okay, so I'm not a scalper as much as I am, like, if I'm gonna do shorter term trades, they're gonna be like intraday, a few hours. Okay, so this is how you're gonna take your profits. It's how you're gonna take your profits. Okay. And yet, Blues Katzen Baby brings up a good point. The most important thing I learned here is that not losing is much more important than winning. Right. Number one way to make money is not lose money. So if you can lock in your profits and guarantee that your account is going to grow, even if, like, let's say, for example, we do hit take profit 1, and then we get stopped out. So what? We actually earned money, right? But then, on the other side of that Bitcoin, people might get upset because they took out 20% of their trade here, 20% of their trade here, or more. Then by the time they get way up here, they only have like half or less of their trades still running. They're like, oh, I could have had so much more money. I could have had so much more money if I just let the whole trade ride. Well, the thing is, we don't know. We don't know if we're going to get all the way up there, right? We don't know if we're going to have a move like this where we come up a little bit and then come back down. So it's all about locking in the profit, ensuring that you are winning the trade. Ensuring that you are winning the trade. Now, how do we determine our stop loss? This is very important. Our stop loss is always going to go below the last swing low. It's always going to go below the last swing low. People are asking what I think about trailing stop losses. I don't think they're effective. I think that's an easy way to get wicked out. I think you need to have a more calculated stop loss below the last low or high. And what I mean by that is this: if you're going to enter a trade, let's say you're going to enter a trade right here, your stop loss needs to go below this low. Okay, if you're going to enter a trade right here, your stop loss needs to go above this high. If you're going to short this, okay? If you're going to short right here, your stop loss needs to go above the last high. And the reason for that is because we're assuming that the trend is going to go in our favor. And what identifies an uptrend or a downtrend is printing lower lows or lower highs. So an uptrend will be like this: higher high, higher low, higher high, higher low, higher high, higher low. We can see that there's a higher low, a higher low. We can see there's a higher high, a higher high, a higher high. So if we're longing, assuming that the uptrend will continue, if we're going to long, let's say right here, okay, our stop loss has to go below the last low, because the definition of an uptrend is higher highs and higher lows. So if all of a sudden we come in and print a lower low, we need to get out of that trade, because that means we're printing a lower low. That means we're coming into a downtrend, right? So, and the same is true in a downtrend. We're printing lower highs and lower lows. So as we come down, right, we need to make sure that if we're going to short this, our stop loss is above here, because if we come up and print, you know, if we're shorting from right here and the price comes up and makes a higher high, that now means we're in the uptrend. So we need to get out of the trade. A lot of people just go into trading thinking, okay, I'm going to use a tight stop loss. I'm always going to use a 1% stop loss. Always going to use a 0.5% stop loss. Well, that's not always the best idea. In fact, it's a really bad idea. You're going to find yourself losing money doing that, because let's just take a look at a trade we could have entered, a really nice trade we could have entered right here. We have a bearish divergence, one of the most powerful indications that price is going to come down, right? Momentum's coming down while price is simultaneously coming up, right? We would have entered right here on our short position, right? As we get the red dot, we enter in here. If we just said, okay, I'm going to use a really tight stop loss, I'm going to use like a 0.6% stop loss, so I'm only risking 0.6% of my account. Look at how close we get to being stopped out there. And if we use an even tighter stop loss, or if we used a trailing stop loss, 100% we would have gotten stopped out here and missed out on all these gains. But if we just only say, okay, I'm going to use a really tight stop loss, we would have gotten stopped out. It's very important you give this thing some breathing room, because you are going to have some volatility there, right? The market doesn't move straight up and down. It moves, down, up, down, up. And as long as the market structure isn't broken, what I mean by that is we have our high that we're shorting, and then we have a lower high printed right here, right? You guys see that lower high. It's not as high as that first high. It's a lower high. And then again, we have a lower high right here, okay? It's not until really, like, this market structure doesn't break, because we have a lower high here, we have a lower high here, we have a lower high here, and it's not until we come up here that we have a higher high, really. Okay, I guess you could say that we had a higher high right here as well. So that's why the market structure is so important for staying in your trade, setting your stop losses, because you need to remember, even if price is coming back up, it's just retracing a little bit. It's not actually switching into an uptrend. What's the difference between knowing if price is retracing or actually changing trend? Is looking at, are we printing a higher high, or is this still a lower high? Is it a higher high or a lower high? So shout out to IBVK. Yo, what's going on, my friend? Can you measure the time when to get out, just like Cryptoface? Yeah, you can. Cryptoface has a different trading style than I do. And I would even say that Cryptoface is obviously a much more profitable trader than I am, because he can make $800,000, $1 million in one trade. Okay, and I can say that I've never made more than, well, I've made quite a lot in some trades, but I have never had more than a couple hundred thousand. Definitely not. So, and of course, it all depends on what and people know I don't like to talk about money on this channel as much as I like to focus on percentages. And the reason for that is because, guys, if you have a small account, you're not going to be able to make $1 million in one trade. Even if you entered the same exact trade as somebody who made $1 million on that trade, if your position size is not that big, then you are not going to be able to make as much, right? If you only put $100 on the trade and it goes up 100%, we only made $100. If someone puts $8 million on a trade and it goes up 100%, well, what do you think? What do you think they're going to make? Y'all know what I'm saying. So that's how we're going to get our take profits and our stop losses. The stop loss always has to go above that last high or below that last low. Your take profits are always just going to be support and resistance levels. You're going to go back to the left of the chart and see where prices historically found a sticking point. So what I want to do now is, from the time that we fell all the way down here, right, I want to take a look-see. Okay, so Ibby wants to know how you find take profits in uncharted territories. I do go into that in the trading course, guys. I do. It's important. You have to use Fibonacci levels and a whole bunch of other stuff that you can do, okay? Check out the comprehensive trading course, jasoncaspertrading.com. Check out the testimonials. Check out the material we go over. This is a everything I wish I knew before I started trading, okay? Everything. And so this is for trading. What I'm showing you guys right now is for trading in sideways markets. And I think this is important because, you know, remember, most of the time, if we go to the daily time frame, most of the time Bitcoin is trading sideways, right? Most of the time Bitcoin is trading sideways. I mean, just look at the price action from, you know, 2018 to, you know, basically before the bull market started. Bitcoin was generally trading sideways, right? So I think this is important. It's important. And this is the daily time frame too, guys. It's the daily time frame. So if you can trade in sideways markets, I think you can do very well in any kind of market. That's just my own personal opinion. But I do think it's harder to trade in sideways markets than in trends, because if you're always in an uptrend, you just buy the dip, buy the dip, buy the dip, buy the dip. Or if you're in a downtrend, you just sell the high, sell the high, sell the high. But if you're sideways, you could easily get sliced up if you don't have a very clear and concise strategy. And so let's just test this. So the first trade that we would make would be when we come down and we fall and we hit our low. Okay, this was the bottom of the crash, right down here at about $29,800. Okay. So let's say that we come down here, we hit our low. Let's go back in time. Okay, to where we hit our low. And this is what we're looking at, okay? We open up the charts. We just had a massive crash. Okay, we just had a massive crash. What do we do? What if you were in a coma for 29 hours, 29 days, okay? A coma for 29 days. And this is what you see. What would we do? Let's talk about it. So HP90 wants to know, is it still possible to join my Discord? Yes, it is. You can go to patreon.com/JasonCasper. I have not been as active in there recently because I just had a baby. I've got a lot of things going on. I am a homesteader, so I've got a lot of work to do in the yard. Out in the land, planting in the field, guys, taking care of the animals, all right? So in the fall and winter, things will become much more active on the Discord. Okay, the last trade I actually posted in my Discord was this one, right? The long from that bottom. I used to be much more active in here, okay? And I plan to be again, but things are just getting intense. So what would we be looking for right here? Well, remember our list. We're going to be looking for, first of all, if we see a divergence, that's going to be our first good entry. If we don't see a divergence, we're going to be looking for momentum waves and money flow. Okay, so let's just speed this up and see what we can see here. Okay, now we get a dot right here, a green dot. And do we have a divergence? Yeah, we do actually have a bullish divergence right here. So we can see from this candlestick to this candlestick, prices come down. We can see from this green dot here to this green dot here, prices come up. So this is a period of time where you would have to ask yourself, is it worth entering a long position right here? Because keep in mind, guys, we need to always put our stop loss below the last swing low. So if we were to enter this trade following this strategy, we'd have to do a 21% stop loss. Okay, a 21% stop loss. Now, many of you know I don't advocate risking, especially if you're new to trading, more than 1% of your account. So what that means is, if you were actually going to take this long, you should only put a 20th of your account onto this trade in order to risk 1%. So I would say that this is not even a trade you should take using this strategy. You should not, because even though price comes up from there, and it comes up quite a substantial amount too, because we have the divergence playing out, right? It comes up 8%. This is a risky trade. This is a risky trade because our first take profit level would obviously have to be right here, right? Because this is the first place we see some kind of support and resistance. We see this acting as support. We see this acting as resistance before we get the dump down. And so it's our first take profit. So you have a few options. Either number one, don't take the trade, or number two, cheat a little bit and move the stop loss below this wick right here. Okay? Actually, yeah, it would even have to be below this wick, which is still a 10% stop loss. It's tough, guys. It's a tough trade. It's a tough trade. Using this strategy, I probably personally would not take this trade. Or what you could do, because look, if you had entered here on the dot, you would have been in drawdown. You would have actually come down about 4% before making your 8% profit. So remember you might not want to take every trade. You might not want to, because you have to put the stop loss in a place that would cause you to risk a lot or enter a very small position. So that's trade number one using this strategy. If you had taken it, you would have been in profit after being in some drawdown. But that would have been a risky entry. The way you can determine a risky entry is saying, is this a good risk to reward ratio? All right. So now let's see what else we got going on here. Okay. Let's see what else we got going on here. All right. We're waiting for a good trade to be set up here. Again, we're going to be looking for money flow and direction. Money flow and direction. So let's see what we got now. Now we got some good direction, right? We got some good direction. We can see that even though the money flow is thick in the purple, we have a double bottom right here, and we have the green dot coming up. And actually, if you look to see, we do not have a bullish divergence, but we have a very clear direction. So in that case, we could enter a long position right here. We could put our stop loss below here. And remember, we could enter during the time the dot is printing, all right? Doesn't have to confirm. You could enter during the time the dot prints. And then let's go ahead and see what happens here. Okay, so we come up, and we hit this line, obviously, because it's already there. But where would our take profits would have been set? Well, we would have set one right here, and we would have set one right here. And the reason we would have set one right about here is because, look, it's wicked down 1, 2, 3, 4, 5, 6 touches of this line, and we come up and hit that line perfectly. And I know, if you're watching this video, you're saying, well, you did this in hindsight. That's true, but if you take a look at the trades that I trade, where let's see, where I set these things up in advance, right? Let's see. Let's see where I set these take profit levels up in advance. So, right here, for example, I have these pink lines in advance based on previous price action. So I shorted down here. Now I'm going to long here. I have these pink lines in advance based on the previous price action. Okay, and then when we come up, we hit our take profit levels perfectly, and look, we're actually rejecting off that level, we're wicking down from that level because it had already been support, support, support. Now it's acting as resistance, right? Support, 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 resistance. And then look at this, right? If you take a look at what happens at that line, we come up above it, and then we come down to it again and get a bounce off of it because it's still acting as our support, right? It became our resistance, then it got flipped into support. Then we come up here and this next line is hit quite perfectly as well. I don't know if I have a picture of it in the Discord, because we only hit. Yeah, I closed this trade out after 2 take profits because I had a lot of work to do. I didn't want to be thinking about the trade the whole time. But let's see. Was this the same trade here? I don't know. I don't know if that was the same trade. I don't know if that was the same trade. No, I'm not sure. But you know, these levels do work. These levels do in fact work. So so somebody's asking if I use market orders when coming into a trade. Do I use market orders? Yeah, usually I use market orders if I am trying to get into a trade quick. But if it's a slower trade, like if I'm trading on the 1 hour time frame, then I will use limit orders to limit in to the trade. Okay, so now we got that nice long position. Okay, now we can see that we're printing a red dot starting to come down. So let's see if we can find another trade here. Okay, find another trade. All right, so right here you could say that there's a potential entry. Although keep in mind, guys, that the money flow is coming up, yet we see the momentum coming down. So perhaps we wouldn't want to enter this trade right here, simply because we can see that the money flow is starting to curve up. So that might take that one. Wow, that's a nice short position right there. Okay, so right here we can see